Okay, so you can't go anywhere without hearing about AI. It seriously feels like we're living through a massive gold rush, one that's creating new millionaires almost overnight. But all that excitement can feel pretty distant, right? Especially when you're just trying to deal with the day-to-day stress of debt. So, what's the right play here?
I mean, this is the real question, isn't it? How are you supposed to jump on this incredible AI opportunity when you feel like you're just trying to keep your head above water with your finances? It's a tough spot to be in, and honestly, the answer is probably not what you think it is.
All right, let's tackle that feeling, that FOMO, that fear of missing out. It feels like if you don't pour money into AI stocks right this second, you're going to be left in the dust. But what if I told you that you can totally 100% afford to wait?
I know, it sounds completely backward, but the logic here is rock solid. If you're struggling with debt, worrying about a brokerage account is the absolute last thing you should be doing. The number one priority has to be getting your own financial foundation stable first.
Now, here is something that should help you relax a little. Our whole economy is speeding up so fast that these once-in-a-lifetime opportunities, well, they're starting to happen a lot more often than once in a lifetime. You just have to look at the pattern.
So, check this out. The World Economic Forum is calling today the fifth industrial revolution. Now, the first one, back with factories, that lasted for about 100 years. Then came electricity, which lasted about half that, 50 years. The internet revolution, maybe 20, 30 years. And then smart tech, Uber, Airbnb, that was maybe 10 or 15. You see the trend here? Each big wave is getting shorter and coming faster. AI is the big one today, for sure. But trust me, another one is already on its way. So if you're going to wait on AI, what do you do instead? You focus on the single best, most guaranteed investment you can possibly make. And it all boils down to some pretty brutal but really simple math. Okay, this is the whole game right here. You could take your money, put it in the stock market, and maybe you get an 8 to 10% return. It's risky, you could lose it all. Or you could pay off that credit card that's hammering you with 20 or 25% interest. Paying that off is a guaranteed, risk-free return of 25%. You are literally stopping a massive financial wound from bleeding you dry. And look, this isn't some theoretical problem. The average credit card debt in America is $8,500. That's a real number, impacting millions of us. But the real cost of that $8,500, that's the part that's truly insane. Just look at that number, $11 million. If you took that same $8,500 and you invested it for 45 years, earning the same 20% interest that the credit card companies charge you, it would explode into over 11 million bucks. That is the crazy power of compounding interest. And here's the kicker. Right now, you aren't the one earning that return. Visa, MasterCard, American Express, they are. They are using your debt, that 20% interest, to pay for their gigantic bonuses. When you pay off that debt, you're not just playing defense. You are taking that incredible financial power back for yourself. So, how do you know if you're in that critical spot, the place where you need to get laser focused? Well, I call it the financial danger zone. Let's break down exactly what that means so you can see where you are. It's actually super simple. If you've got high interest debt, we're talking credit cards, payday loans, that kind of thing, and you have less than $2,000 in savings for an emergency, you're in the danger zone. That's the signal that it's time to get dead serious and take action like yesterday. Now, getting out of this zone, it is tough. I'm not going to sugarcoat it. It means making some real but temporary sacrifices. While you're in this phase, you just don't go to restaurants, no name brand clothes, no vacations, and yeah, no Netflix. But that last one is not for the reason you think. Look, the point of cutting Netflix isn't about saving $15 a month. Who cares? It's about saving your most valuable asset, your time. The average person watches more than 2 hours of TV a day. That's 2 hours you could be using to learn a new skill, pick up a side hustle, anything to earn more money to throw at that debt. Time is the weapon you use to escape the danger zone. Okay, so you've done the hard work, you've fought your way out of the danger zone. Now what? You need a new plan, a new blueprint for your money that leads to actual financial freedom and puts you in a position where you can invest. This is the target, the 75-15-10 rule. It's simple. For every dollar you bring in, you spend no more than 75 cents, you invest at least 15 cents, and you save at least 10 cents. This is the blueprint for how you live a good life while actively, automatically building wealth. And this rule, it fits into the bigger picture. See, building wealth happens in 3 phases. Phase 1 is what we've been talking about this whole time, getting your money right, building that solid foundation.
Only then do you move to phase 2, which is growing your money through investing. Phase 3 is about protecting everything you've built. You just can't skip ahead to phase 2 if you haven't mastered phase 1. It doesn't work. So let's bring it full circle back to the AI gold rush. If you're not ready for this wave, does that mean you've missed out forever? No way, not even close. Let's talk about getting ready for the next wave. The single most important thing to get in your head is that markets move in cycles. They always have, they always will. The crazy boom you're seeing today will eventually be followed by a bust. And that bust is what creates the next amazing opportunity for people who are ready. And this isn't just a theory, this is recent history. After the dot-com bubble burst in 2000, you could buy Amazon for pennies. When real estate crashed in 2008, people bought properties for 90% off. The pandemic crash in 2020, the market dip in 2022. These were all massive buying opportunities for people who had their cash ready. The opportunities never stop coming.
So let's just be crystal clear about this. Your job right now is not to desperately chase the AI trend from a weak financial spot. Investing when you're desperate is a guaranteed way to lose money and make terrible decisions. No, your real job, your mission, is to get your foundation strong, pay off that debt, stack up those savings, put yourself in a position of strength, so that when the next big opportunity comes knocking, and it will, you're ready to kick the door down and seize it. Because it is coming, I promise you. Another market crash, another tech revolution, another once-in-a-lifetime moment is right around the corner. The only question is, will you be ready for it?